Good afternoon, everybody. Welcome to August 1st, your Monday edition for the TraderMerlin show. Good to see you, Siraj, Terry, Tomasina, Chris up in NorCal. We got Gary and Les as well. I'm sure many others joining here as we progress here through today's show. So today's topic, I mean, slurring my words. I didn't win the lottery, and therefore I'm all bummed and depressed. Anyway, I doubt anybody here won the lotto, but if you did, let me know. I'll help you manage that money and continue to grow it. But if not, we'll just have to keep on trading and investing and maybe play the next lotto. So today's topic, I'm going to dive right into it and just get rolling and see if I can get this to about a 30-minute show, as I always say I'm going to do, but never seem to manage to exercise. I'm going to talk about July's strong finish. The reason I want to do this one is I've mentioned that a lot of times everyone expects things to do something, and the market usually does the opposite. So as you may know, July, we had some very strong numbers for the U.S. equity markets. There were a couple that were actually one that was down, but for the most part, the indexes looked great, so a really strong finish. And a large part of the talk track that at least I'm hearing out there is, wow, this is the best July we've had since 2020. Here we go. We're maybe back off to the races. And that may all well be fine and dandy. We could see all-time highs. Who knows? I personally don't think that we're going to see all-time highs, but, I just listen to what the talk track is. So all of a sudden, people become more bullish, as we mentioned, or at least I mentioned on the show a couple weeks back. Really felt like we were due for a nice rally here because everyone was so bearish. As you can see here, we'll bring up the charts here, and I'll bring up the S&P 500. We've had pretty much an entire month plus of just nice higher highs, higher lows, trucking forward. And right now, we are actually smack dab on the S&P in a supply zone that goes back to late May and early June. So, yes, we have had this very strong July, which I'll run through all those numbers here for you in just a second. But the question is, now what? Is now the time where all the optimism starts to shift and become overly bullish? Therefore, I'm going to start becoming more bearish? Well, I would hope so, because I'm right at a supply zone, which would encourage me to be going short. So let me dive into the numbers here. We'll run through the top 7 markets like we normally cover and look at them just for the month of July and its very strong finish. Now, they're probably all out of order. Yeah, they're going to be all out of order, I think. I didn't reorganize the animations. Worst performer we had for the month of July was crude oil, down 6.75%. As you can tell by this chart here, not the best looking price action. Of course, it started the month at a much higher price, been drifting lower and lower and lower, and today is very noteworthy. I'll talk more about this as we get near the end. I think that this is a critical point for anybody who's long or just trading period in crude oil, because we keep bouncing off this 93.60 mark. You can see, I've had this line on for a while now. It just keeps on bouncing on it. And again, the more times it hits this, the more likely it's going to break through. So on the day, crude oil down about 4.7%. But for the month of July itself, 6.75% slide for crude oil. Now moving up the ladder here. Oh, dab and nabbit. My animations are all screwed up. I'm just going to bring them all on. There you go. Screw it. We'll take them all and then just slap them all in one place. There you go. So what I have here for you is going from bottom to top. Crude oil was the worst, down 6.75%. You have starting from the positive territory, gold up 1.41%. I didn't check silver, which was more than 1.41 for sure. It was definitely a great mover. Then we get to the big indexes, and that's where the real numbers start to show up. 6.77% for the Dow, 9.21% for the S&P, the Russell clocking in 10.56% gain for July, and the NASDAQ beating all the indexes at 12.55. Thank you, tech and Amazon and Apple and all that earnings we saw last week. That was great. Now, Bitcoin, surprisingly, was the big leader for the month of July. Now, it's interesting when you look at the price of Bitcoin. It's like, it's up 27.88% for the month of July. But let's not forget, it was down almost 80% since November. So it had a lot of room to rally here. And who knows if this will continue on, but it's looking pretty good for Bitcoin. Now, what I also included here, just to, paint a picture of what volatility looked like for the month, the second column of numbers on the right-hand side of your screen represent the distance between the low and the high point. So to me, this tells a lot about the sentiment, where we ended up with, and what the final numbers were. If you notice Bitcoin, right, it finished the month up 27.88%, but it had a total range of 32.15. What that tells you is that Bitcoin ended up being very strong and closing the month near the high. Awesome, right? Not bad for recession. Well, again, we have to wait and see what these numbers kind of pan out over the next few months, right? A recession doesn't happen in just a week or two. According to former President Clinton, one of the interviews with him that's going around, and he says, President, well, what is a recession? He goes, well, recession is 2 consecutive quarters of negative GDP. And now we're going to change that, apparently, because we don't like that definition. Let's make it fit modern times, apparently. Anyway, the one that stands out here for me is actually gold. So you notice that gold was only up 1.41%, yet it had an 8.15% range, which means it had a tremendous amount of volatility, but really, all in all, didn't really move much. Quite often, that represents indecision. And I'll look at the monthly time frame chart here so we can see kind of what that means for us going forward, because it is actually a fairly decent pattern. So there's your month of July. Let me see if I can do a poll here real quick. Are you bullish for August? AUGUSD. Just curious. I know we don't have a lot of people here, and we're a small group today, but are you bullish for August? And when I say are you bullish for August, what I'm referencing is, let's just say the S&P 500, right? There's obviously something we're bullish and bearish on, but for this question, let's focus on the S&P 500, right? We're coming off the heels of a rip-roaring July. Everyone's feeling really optimistic. Look at these price charts. Here's the dailies, and I'll go up to the S&P, right? It's looking really good. Higher highs, higher lows. Granted, we are up into this yellow box right here. You look at the NASDAQ. NASDAQ broke through that one, right? And I told you my stop on the NQ, the triple Qs, was 315, and we broke that. So fortunately for me, I got out earlier than that. I got out on this big bounce here, this big green candle out of my short position, thank goodness. The yield curve is still inverted. Yes, it is, Robert. I believe it's inverted on not only the 10 and the 2, but the 10 and the 1 as well. Thomasina, the permabull, that's all right. Over the next 100 years, you'll be right. Right? Every permabull will be right at some point in time. It's just a question of how long does that market go against you. Now, there could be periods or decades where the markets go down. And the one that I always get, not chippy, but I always am entertained when I talk to anybody who's a permabull and they're like, I'm always going to go long. It's like, okay, well, if you look back here at, let's say, the weekly and look at the S&P 500 through those massive sell-offs, right? So take a peek at this one right here. If you're a permabull and you bought back here in May of 2000, you basically sat there and did nothing with your money for 13 years. That, while you might be permanently bullish, that's just a waste of opportunity cost. So while I'm guaranteed long-term bullish, when I say long-term, I'm talking the next 100 years, who knows what the next 6 months or year or 2 years could be bringing us. When we look at a price chart of an index that looks like this, that tells me that something is broken. And if I put in a logarithmic scale just to make Tom Barr happy, it still is a pretty unbelievable rally to the upside that looks poised for a significant correction. But anyway, we don't want to hammer on anybody who's a permabull. It's all about opinion. So cool. Can't help it. It's my personality. Long or cash puts. Cool. I can't say anything about anybody who's a permabull. You're going to be right. That's it. You're right ultimately. It's just when will you be right? Okay. So went over that real quick. I want to dive a little bit deeper into today's markets because the one chart to me that stands out more than any is crude oil. And of course, that has a lot to do with the dollar today. Here is your crude oil chart. And notice it's just basing right here at 93.60. Now, if we get it closed down below 93.60, I do think you'll start challenging some of these lows that were significantly lower on crude oil. But what's it going to take to make that happen, right? Well, the dollar index is the other one that we've been talking about. And you guys might remember we said if it breaks below this yellow box, it's probably going to challenge the next area of demand. The bottom of that yellow box is right on 106.20, and the next area of demand is about 105.15. So right now, in the last 2 trading sessions that we broke down below it, it's coming straight into this area of demand. We'll call it 105. So going forward, over the next couple of days, keep your eyes on the Dixie. DXY is the ticker symbol that you can pull up on just about every platform. And keep your eye on it because I'm expecting there to be a bounce in the dollar here, just simply from a pure technical perspective. You have this nice little rally base and then a rally out. There's a lot of factors here that would lead me to believe it has a high odds enhancer score just for that one little zone. And here we are revisiting that on the broader long-term uptrend for the dollar. So to me, this is kind of a pullback just into an area of demand on the dollar. And if it does work out and that dollar starts to surge again, what you're going to end up seeing is the S&P sell-off, which would make sense because here we are right at supply. You'll also see crude oil have, crude oil technically should sell off if we get more weakness in that dollar. However, it's been acting somewhat independent here, in my opinion, different than it normally does with that inverse relationship to the US dollar. The other piece here would be looking at things like commodities, right? So as the dollar gets weaker, gold tends to surge. As the dollar gets stronger, gold tends to tank. And you notice the dollar's been on a real strong run. Well, gold has been drifting. Well, over the past few days, gold, silver, and other metals have done very well off the lows. I mean, you usually don't see huge percentage moves like this, but from the low that we have back here on July 21st to where we closed at today, gold is up about 6.61%. That's only 7 trading sessions. That's pretty damn good. Yeah, exactly, Gallo. I'm with you. Nice. Let that dollar rip. It's interesting because I really wanted to start building some positions today. I just was like, I don't want to be overzealous. I'm going to be reactionary. So there's multiple ways to trade this. So if that dollar index that we just looked at, I'll bring it up here again. You know, you can make the argument that you're already in the zone or already hit that zone today. Well, my guess is we'll probably drift down a little bit more, and I'm going to wait for it to bounce off here. So a lot of people call that a confirmation. I'm just going to wait for the result of that demand holding. If it doesn't hold at 105, well, then I just got to keep thinking the dollar is going to go down and the equity markets are going to continue to rally. But it kind of lines up perfect. It's that confluence of markets where I have the dollar is coming into a demand, the S&P is coming to an area of overhead supply. Those two things look pretty good. Now, the VIX isn't really anything noteworthy, right? VIX is only at 22. I personally don't use VIX. I know some people have been asking me a lot more explanation about VIX. Not really, doesn't really do it for me. Back in 2008, when the VIX got up to like 90, it was just broken. It just didn't seem to work for me anymore. So no more VIX in my world, at least for making trades off of. It is nice to see the fear and the emotion with VIX, etc. Just watch the monthly, weekly, and daily charts, report news, direction. It's a little bit of everything, right? You kind of got to watch it all, but I'll be reactionary in this one as opposed to proactive. A lot of times you guys have seen me where I will jump the gun on something. I'm going to wait a little bit on this just because I feel like that dollar is so critical right now, and just the fact that it's come into this rather aggressively. If it does break it, we'll probably drop all the way down to, let's say, 104. After that, you've got some other levels further down, but any decay in that dollar is fuel for a market rally to the upside. Let's see. I heard some traders say they will never short because it's un-American. Hey, yeah, that one cracks me up. That it's anti-patriotic to short the markets. Now, I think, well, let me finish the survey here, because 59% of you said that you're not bullish for August, and 41% said that you are. So fairly mixed, fairly split. One of the things that is very interesting about that statement that you make, which is shorting is anti-patriotic or un-American. As a trader, absolutely not. There is a time and a place where things get way overvalued. They go way too lofty. How is that un-American? That to me is somebody who just has no clue what they're doing. Now, that said, there is somebody, a group of people who should never be allowed to short the markets. It should be un-American, anti-patriotic for them to do so, and that is our elected officials. So any senator, any congressman, any president, any VP, anybody who's an elected official to make this country great that is shorting the markets should go to jail. To me, it's treasonous. You're literally flying against what you're supposed to be doing. So if I'm start shorting energy stocks because I might do things that are going to crush and hurt American industry with regards to energy, that's anti-patriotic. That, to me, is what should be prohibited. Unfortunately, it's not. Your politicians can short these markets all they want. Isn't that wonderful? Especially because they're the ones voting on the bill. So, for example, the infrastructure bill is $1 trillion plus, multi-billion-dollar infrastructure bill. If I'm an elected official, and I see that maybe we're not going to pass this infrastructure bill, I'll just go out and start shorting all these energy stocks and natural resource stocks and building material stocks. Why? Because I know they're going to take a hit. They run up in expectations we're going to sign this bill, but they should never be allowed to short these markets. And that's something that I wish we could change, but we never will, because they would have to vote on it themselves and say, no, we vote that we're not allowed to short anymore. It'll never go through. It's a total con job. All right, let me real quick run through some of the stuff that happened out there today. Here are your economic announcements. Now, the stuff down at the bottom hasn't happened yet, so keep your eye down there on Australia. As you guys can see, the Aussie dollar coming out with a rate announcement today. It is right at supply. I think that they've already priced this number in. They're expected to jump from 1.35 to 1.85, a 50 basis point position or increase. Now here is the chart of the Aussie dollar. You can see it's been really strong for the past couple of weeks, but it's right at an area of supply, literally in it today, right at 0.70. So keep your eye on that one if you are trading this Australian dollar. Again, that rate announcement coming out a little bit later on tonight. Now the economic calendar here did give us some interesting numbers. You can see the final manufacturing numbers here were pretty much in line with expectations, if not better than expected. So you can see the ISM manufacturing PMI, they were expecting it to drop by 0.7%. Well, we didn't. We only dropped by 0.2. To me, that's great. I love seeing a slight change as opposed to, missing those big expectations. The one that really kind of is concerning here, and again, I do believe we are in a recession. I do think we will continue to drift down. I was having lunch today, and I heard two guys that worked for a Salesforce, and they were mentioning that Oracle is now laying off a couple thousand people. The layoffs are coming, so I think that this is going to keep pushing our markets lower incrementally as this unemployment number starts to rise and people start to lose their jobs. So the construction spending is dangerous because remember, if construction's not going on, there's so many jobs associated with that. That means that the prospects for the housing market are not as good. And again, 14%, 50% of GDP is made up of the housing market. This could definitely have a pullback in our data. So they were expecting construction spending to actually surge from 0.1% to 0.3%. Summertime, let's build some homes. Nope. Actually down 1.1%. That is not good at all. And that was probably some of the worst news out there today that saw on the economic calendar. Okay. When is Scott going to be on? Oh, look, I'm going to try to get him on once a month. I don't like bugging these guys. There's no real huge benefit for these guys coming on the show other than, educating for free. And a lot of them are busy doing a ton of other stuff. So I will try to get him back on the program once a month. That's my goal. Politicians should be barred to trade the markets, insider trading, conflict. I totally agree, Andrew. No, 100%. But what do? Do you put it in a blind trust? You could set up an immutable trust, set up a blind trust where the politician's not supposed to know what they're doing at all. But that there's some way they'll communicate to the people managing that fund. It should be prison terms for them to trade at all. You make enough money off of the salaries that you make. So anyway, it really just drives me nuts. Just like we can't short our employee stock. Yeah, employer stock. Actually, you can. You just can't do it through... You can short your employer stock. Oh, yeah, you can. Wherever you work, you could... Well, depends if there's shares available. But, if I work for Microsoft, I could be shorting Microsoft. I might lose my job if I did. if they found out. Merlin, can you call me at any time? I'll do your show. Oh, you want to do the show for me? Oh, you mean be the guest. All right. Let's get more people on. So I'm going to go through a couple questions. Naum, I'm not sure if you're here. He usually is one of the regulars. I just wanted to address this one real quick because I was talking so bad about Apple and my stupid watch that always talks during the show, which I'm not wearing today just because it annoys me. He says, you support Apple, yet you fear the stock. Whoa, Naum. I do not fear Apple at all. I'm a firm believer that you have to set a cornerstone of your discipline somewhere, right? There should be an anchor to where everything is built off of. And for me, in my trading plan, page 3, there's an Apple logo with a circle around it and a red line through it. I can trade Apple. I can absolutely trade Apple, no problem. I trust myself enough. I know to admit when I'm wrong. I can be very disciplined with it. But back in the late 90s, early 2000s, Apple used to always beat me for whatever reason. So it's not that I feared Apple. I just looked at it and said, I'm losing money when I trade Apple. I got revenge trades going on. I get really puffy with it. Next thing you know, I lose even more. So I just said, what? I'm not going to trade Apple ever again. And I just used that as a cornerstone for my discipline. I'm not afraid of Apple. I actually hate some of the products because they're so proprietary and closed off. But I don't fear the stock at all. I could trade it right now and probably do rather well, in my opinion. It's got some great trends that go on. I don't fear it now, but I use that as kind of this root of my discipline, which is I told myself I'm not going to trade that, and there's reasons because I lost money on it, couldn't figure it out, and I got emotional about Apple. So who cares? I've got thousands of other securities I can choose from just in the equity markets. But then I can look at Forex, I can look at futures, I can look at options, I can look at crypto, and I have all of these different things that I could be trading. So I just use it as a reference point for my discipline. Not afraid of it at all. Robert, is Chinese lockdown affecting the economy? Not right now, it's not. You know, any extended lockdown, especially if things start to get really bad, can certainly have an impact on the economy. I'm not too concerned with that. Now, of course, I'm kind of like Lori says, I don't trade Chinese stocks now. I don't trade them either. There's only two companies out there that I'd be interested in, and that'd be Baidu and Alibaba, actually predominantly Alibaba. Let's take a peek at Baba. I haven't looked at it in a while. Yeah, still not looking the best here for Alibaba, but I've used Alibaba a ton in the past, and I think that this is one that I would probably be okay adding to a long-term portfolio. The other one was Baidu, but I really don't. B-I-D-U. Not really strong feelings about it now either. It's just sideways. But I don't really trade the Chinese stocks, and I'm not so concerned about a Chinese lockdown affecting the economy. You know, what I will be looking at is some of the shipping costs. So if I start to see shipping costs really surge and transportation costs surge, then that might impact my longer-term decision-making on things like the SPY and some of the other ETFs that I trade. I predominantly do my swing and position trades and options trades using exchange-traded funds, which is weird because I used to trade the most volatile stocks of the day back in the late 90s. But now I'm really more of the opinion of, let's trade something that's diversified, that doesn't have the big risk and a big volatility risk, and I'll use more leverage, right? That's why I like options. That's why I like futures as well. I am at SQQQ, a short position. William, so one thing, we've talked about this many times. The longer you stay in this, the more money you will lose. I don't care if it goes in your favor or not. If it goes in your favor, you think, oh, I'm going to do well, I'm going to make more. So this is Ultra Pro Short. So this is a 3x short the market. So you're triple short the NASDAQ right now, which is, you got some chutzpah, buddy, because that's not looking so good. NASDAQ broke through its overhead supply. Granted, it's pausing, but if that NASDAQ continues to run, this thing's going to lose gas real soon, and you'll find yourself back down at $30 or even lower. The challenge here is, again, these leverage ETFs, the way they are calculated, they will decay over time. So if you say you're holding this to Q4, you got to understand, William, you're probably going to lose. My guess would probably lose 3 to 4, maybe 5% of the total value of your position just for holding this. So let's say the triple Qs right now. Let me just bring it up real quick. And William, let me know if you can answer this one real quick. So right now we're at 315.50, right? We'll just call that what it is, 315.50 on the triple Qs. And you say you want to hold it through Q4. All right. So let's just say December 31st comes around and QQQ is back at 315.50, right? So you've not made anything, you haven't lost anything on the triple Qs. What will the value of your S triple Q position be when that happens? Right? If the QQQs are exactly where they're at on December 31st as they are right now. So let's see, I got August, September, October, November. I got, let's say, 6 months for this all to pan out. In 6 months' time, if the underlying for the SQQQ is the QQQ, if that has not moved at all, it's exactly the same, what's the value of your position in SQQQ? Most people will say, oh, well, if the NASDAQ hasn't changed at all, then SQQQ will be exactly where it's at. That's not the case. It will be significantly lower. I mean, in a big way. So let me just do a visual example here just so you can understand. Nobody won the lotto. And by the way, Indigo, thank you very much. You sent in a nice contribution right at the end of the show. Let me just put a horizontal line right here just to make this point because it's kind of a cool feature. So we are right now, right here. It's called 315.50. And you can see that going back, I'll call it January of 2021, right? That's when we were last at 315.50. So check this out. Let's go to stockcharts.com. And what I'll do is I'll create a perf chart, and I'll go QQQ, and I'm going to add in S. Okay, so I'll look at these two right here, and I'm going to go back to what did you say, January of 2021? Yeah, January 2021, which is going to take us to right there. Okay, this might make your butt pucker a little bit, Michael. This really, sorry, William. It really should. So if you look right here, can you guys see this top line? The top line here in red is the NASDAQ 100. You can see that from January of 2021 to where it is right now, it was only a gain of 2%. But look at the inverse ETF. It's down over 50%. That's the problem with these. You're like, well, wait a minute. It's only supposed to be triple. So if the NASDAQ is up 2%, this one should be down 6%. Yeah, it's dangerous, man. Those are not designed to be instruments that you held long term. They're designed, well, this really should drive it home because the QQQs were pretty much unchanged, but this position's down 50%. Holy cow. Let's go back to right here back in May to see what that looked like. I'm going to go to the points where I can see that the NASDAQ is like unchanged. That's not 20 days. Let's go to May. So here's a good example. If I go all the way back to April 27th, the NASDAQ is literally exactly where it was. No change whatsoever. Yet the triple ETF is down almost 20%. Dangerous stuff, man. So that's my opinion of it. The only time that I think you should hold those is if you're looking at the market and you go, man, this is the greatest short setup of all time. This looks so good to short the QQQs. Then, okay, go long SQQQ. But you got to be real careful. Those are really designed to be day trading and short-term swings, meaning a couple of days trading instruments, not investment vehicles. They will eat your account heavily over time. Let me see. What else do I got here? What about SPY and SDS? Let's do it. So SDS is double short. So here's SPY. And, oops, yeah, we're going to do a perf chart. Okay, we'll do SPY and then do SDS. And I'll even put SH on there because SH is a 1-to-1. All right, so I've got a single long, single short, and a double short. And let's go back to that same point that we were just at where the S&P itself is unchanged, which, oh, I'm sorry. I'm totally screwing this up here. That's going to be fewer. We'll go out here to March. Where was it? It was March. Okay, so you guys can see this is a good example of it. So if you have unchanged, this is all the way back to May 5th, SPY is unchanged. But the single short is down about 1%, and the double short is down 4%. It's just kind of weird. How do you get your live notifications? So Andrew, and thank you for subscribing, Andrew. I appreciate that. There's a little bell on the YouTube channel. So you hit subscribe. There's also a little bell next to that, and that should notify you every time I go live stream. It's that little bell icon. So there you go, NJ. Same thing with SDS, SH, QQQ, and let's say QID or SQQQ. It's scary. How will the Chinese housing market collapse affect us? I mean, it's one of those things, and again, I don't know, Karen, exactly how it's going to impact everything. My hypothesis would be something along the lines of, if that housing market starts to implode, consumption in China is going to slow down significantly. When that happens, you're going to start to get a lot of defaults. And there's a lot of debt that might be underwritten from the U.S. that China is utilizing. And if there's defaults on some of that, then that starts to send financial ripples around the world. If it is in fact, and let's be honest, people have been talking about the housing crisis there for a long time. Like literally a long time. The longer that this looms, this crisis, I think will become desensitized unless it starts to really pick up steam and absolutely collapse, like I think it should. If it does collapse, then it'll just further exacerbate any recession or depression that we may be in, right? And I am in the camp of we're in a recession, in my opinion. We'll have to wait until November, maybe December, to see what the rest of the economic data is, to see how fast we're falling in a recession, or are we stabilizing? But personally, I would say right now we are in a recession. So I don't put too much emphasis on that, Karen, as far as China and their housing market bubble. I don't trust the information I get out of China anyway, but as a longer-term investor, I'm definitely more bearish on this market right now because of what's going on in the U.S. with our recession markets, our inflation, our GDP declines, our unemployment starting to rise. And then you sprinkle on some of these external events like China and housing market bubble, supply chain disruption. Then I think that just adds fuel to the fire of market downside. Which broker do you recommend for the Forex US? I don't do much spot anymore, GS. I used to use Oanda, but I don't know. I thought there were some weird execution pieces going on behind the scenes and fills that were just, to me, not right. So there's that. I would use probably Trade Pro Futures. It's just I know Trey. I know that he'd probably give me the best service and best platform and best cost. So yeah, Trade Pro Futures would be where I go. Just ask to talk to Trey. He'll probably answer the phones because he's always there working. I always want to get the notification like 20. I don't know why, Drew. Well, I'm glad you're here. Glad you're joining us. Okay, let me keep going through questions. I will make sure I get to all these. So Les was here to start the show, as he always is. It's always a competition to see who gets to start this show first. But Les sent this one in on Friday, and I just ran out of time when I did my lotto show. What is the carry trade, and why is Congress interested in it? Well, I've talked about the carry trade a couple times in the past, and maybe what I'll do is I'll get a Forex trader on here and we'll do a back and forth about the carry trade. But basically, it's not about price appreciation. It's really more about playing the differences in interest rates, the arbitrage of interest rates. So, for example, I will go out here, and just because it's fun to do, and I will go look at the current Fed funds futures because I haven't looked at it today, and I'm curious to see if people are expecting the rates to increase. But right now, okay, well, it looks like they're dropping their expectations. I told you after the meeting last week, I expect there to be a 50 basis point increase, and that's kind of what we're lining up to be. It looks like a 50 basis point increase. But right now, I can get 2.5% for the Fed funds rate for US dollars, right? So 2.5% there. If I buy US dollars, in theory, I make that 2.5% rate. And of course, we'll worry about how the brokerage firms calculate all that out. But in Forex, spot Forex, you're buying two pairs. It's always like USD, JPY, GBP, USD, right? The first pair is your base pair, and that's what you're going to go long or short on. The second pair is the opposite side. So for example, if I have USD, JPY, and I'll bring up a chart right here. If I went to buy USD, JPY, and here is your chart. Okay, if I went to buy the USD, JPY right now, which is cratering, thank you to the US dollar, that means I am buying US dollar and I'm going short the Japanese yen. That's essentially what that means. Now, what it also means is if I'm carrying this currency, I have bought the dollars and I've sold the yen. So if I'm selling the yen, I'm responsible for their interest rate. So what do I mean by that? Well, let's go to... let me real quickly look here. I want to check this number just to make sure I'm right because I got so many interest rate numbers in my head right now. The UK is having their announcement this week, and I believe they're expected to raise 50 basis points. I want to get that number in. I think that's Thursday. So British pound right now is at 1.25. Okay, 1.25. So if I buy GBP USD, I'm earning 1.25% for owning the British pound, but I'm spending 2.5% because I'm shorting the US dollar. So I'm losing 1.25% for holding GBP USD. Does that make sense, everybody? Don't worry, I'll block this scumbag here that's spamming everything. Okay, there we go. Does that make sense, everyone? If you're buying one, you're selling the other. And since the British pound is paying me 1.25, I guess maybe I can do this a little bit better if I... I'm not seeing that any changes come in here, or any comments come in. Okay. Let me see if I can visually draw the example, because this is what the carry trade ultimately is. You're buying one currency and you're selling the other. And let me add a new slide here. We'll make it look like this. Okay, cool. Well, everybody seems to get it. So if you don't get it, you can type in, no, I don't get it, and I will explain it further, draw a picture. But you wonder why the US dollar Japanese yen has been looking so, why does it just keep rocking to the upside? It's because right now, if I own the USD JPY, I'm going to get 2.5% for holding the dollars, but Japan's rate is negative. It's negative 0.1. So I get to keep the 2.5%, plus I'm responsible for the other part, but since it's negative, I would earn that too. So I'd be making 2.6% for holding USD JPY. That's why you're seeing almost everything against the yen has just been getting stronger and stronger, because the US dollar, they've been raising their rates. The British pound's been raising their rates. Australia's been raising their rates. And Japan is still negative. So it becomes a more desirable trade as the carry trade. Now, to Les's question, why is Congress interested in it? Well, I don't know if it's actually Congress. I haven't seen any issues that Congress is raising with regards to the carry trade. However, you have to think about the impacts that this could have on an overall economy. If I'm somebody in Japan, I could be borrowing a ton of yen, right? And literally have a negative interest rate, and I can buy dollars. So I'm creating demand for the U.S. dollar. The higher that they raise rates, the Fed funds rate, right now 2.5%, will probably be 3% at the September meeting. That means you'll get 3% for your U.S. dollar holdings. So it's making it more desirable for other people around the world to buy U.S. dollars the more that we keep raising. So now all of a sudden you have fueled demand for dollars. And as you guys may know, we've talked about this before, the Fed, Federal Reserve, is selling bonds and removing money supply. So not only do we have increased demand for dollars, we have fewer dollars in circulation. Now, why would Congress be concerned about this? Because what it can do is it can influence the economy. If I all of a sudden get a huge influx of people trying to buy U.S. dollars, and mostly it's going to be central banks and other entities, I guess, hedging themselves a little bit. If all of a sudden Japan comes out and buys $1 trillion worth of U.S. dollars and shorts their own currency, it's going to drive the U.S. dollar up, which will hurt our exports significantly, and it'll drive the yen down, which will hurt which will improve their exports. So it's a manipulation tool that everybody uses. Don't get me wrong, every country does. But right now we're at a point where you're starting to see manipulation. You're seeing some countries stay right where they're at and not move at all. Japan, you still have the LIBOR rate, Swiss francs, there's another negative rate. So I could buy one, sell the negative one, makes it a double positive, and all of a sudden I start to earn more. So to me, that's a quick explanation of what the carry trade is. But the impacts for the market could be huge if there is increased demand for a currency. And right now, I've been pointing this one out. I do believe that the dollar is still going to creep on up, and this has to do with that carry trade. More people, more banks are buying U.S. dollars because, well, they probably want to buy bonds as well. Well, they're priced in U.S. dollars. So someone asked about the yield curve. Let's go check out the yield curve here real quick. Here is your 10-year futures today. So you can see the price of those bonds were ripping up today, which means the yields are dropping. And, there's our head and shoulders pattern. We've broken it. Let's see, that would actually target, when we talked about using measuring objects when using things like head and shoulders, that would put a target on this one, which would be right about this trend line. My guess is, boy, we'll come right down this trend line. That's pretty interesting. But we broke that about 3 days ago on the 10-year. Yields are dropping right now at 2.58. We were up at 3.3, 3.4. Now the yield curve. Here is your 10 and your 2. This is what most people say is the yield curve, the 10 and the 2. And you can see that we're below that green line there, which is 0, which means we are inverted. You can earn more yield by holding a 2-year versus a 10. It should not be that way. That's broken. Here is the 10 and the 1, which Bill Addis says is the true measure of the yield curve, and that is also inverted significantly. Now, one longer-term one here, which is the 30-year and the 2, right? The 30-year should be getting a lot more yield for, right? Well, it was inverted last week, quite a bit. Anyone with money in the country with the crappy currency going to flee to safety in dollars, that's a lot of people. I think even foreign central banks do it. It's true, but let's be real, brutally honest. The only people that are going to take advantage of that, Joe, are people who really understand it and big banks and financial firms. The average Joe, right, the average American that's not watching this show has no clue about what the carry trade is, has no clue that you can get 2.5% for holding U.S. dollars and then earn another 0.1% for selling the yen. They have no idea. So I don't think the average person is going to run out there and be like, hell, I'm not going to hold my Japanese yen. I'm going to go buy some dollars. I don't think they think like that. But I think the more people that knew about it, it certainly would have an impact. And carry trade is something that, I guess, again, most people just have no idea what it is or how it operates. And I think maybe that's why Congress is interested in it. And you explain it to us. What does this mean? Any big run on a currency can have dramatic effects on the economy. And right now, I'll tell you, that's what the Fed really doesn't want. The Fed doesn't want all this increased demand for dollars, but it's going to get it. Let's see. 1 second here. So I'm just going to run through some questions I didn't get to from Friday's show until I see other ones come through from you guys. Kingsley Haven't seen you in a while, my friend. Thanks for sending the question in. He sent this one in on YouTube, so if you have questions you want answered, YouTube is the best place to go do that. Just put them down below a video. He says, is there guidance or a rule for when to move your stop, and does it matter what time frame you are trading? I don't personally think it matters, for me anyway, what time frame it is that I'm trading. As far as stops go, I guess it has to deal with what your plan is. Are you an all-in kind of person, an all-out? Or are you a scale-in, scale-out kind of person? That makes a difference. I generally am a scale-in, scale-out kind of person. Now, the reason for that is when I first make a trade, I kind of know that there's a good chance I could be wrong. And as it starts to move, I will add more to that position. Now, what I'll generally do, and I don't have a specific number or rule for this. Generally, I will, once I have a nice chunk of profit, I will move my stop loss up to just above break even, so I make sure I've got money no matter what. Now, if it's coming into one of my targets, say target 1 or target 2 or target 3, I'm going to be peeling money off at that point so I can lock in those profits, and I'll move my stop loss up even higher below those zones. So that's simply how I do it. I don't have a percentage. I know some people like to use rules. I think it depends on each individual security, how much things are moving, what the ATR is at that moment, but I think it's a great idea for everybody to move your stop losses up once you have some profit. Now, not right away. Let's say you got 2 cents worth of profit. You don't move your stop up to break even. You still got to give it that wiggle room. But let's say, the ATR is 25 cents and you're now up $1. Okay, well, I don't need to let it go all the way back down and stop me out for a 25-cent loss. Maybe I'll move that up to where I'm going to lock in 50 cents. I like to let it move half. I know it might be too much for some people, but I do like letting it move a little bit more once I move my stop losses up. Because at that point, I can put my hands back and go, the only thing that's going to hurt me is a big gap. And generally, right now, I'm really not trading things that gap. I'm trading ETFs. I'm trading diversified products. So there you go, Kingsley. I hope that helped. AMC, huh? Wow, are we going back to the shit coins? Actually, AMC to me is way better than GameStop, but I still like to make fun of AMC. Look, AMC, I would not buy it. I would just stay away from it. I think it's become a joke and kind of a novelty. But, you go that trend line that starts back here on May 12th. You've got a decent trend line moving up. Personally, I would wait till after earnings before you do anything, NJ. Their earnings are coming out August 4th, so they're going to come out this week. Hell, we'll even watch that one on the show just for fun. But, look at the long-term chart here. It still doesn't look good, and I would contend that movie theaters are not packed. I think what a lot of movie theaters did is they actually removed a lot of the seats, and now they're more spaced out. Sometimes you have recliners. They're trying to make a little more 6 feet distance between people. I don't know. I just don't see them getting the profits back that they used to have. Now, this big spike up here that happened in 2021, let's not confuse that with profits, right? If you look back to before 2020, here is what AMC looked like before 2020. I would say this thing was fundamentally dead in the water anyway, broken, right? Probably going to have to do some, bankruptcy and do some restructuring of their company because they just look like crap. I mean, the thing was up at $36 and just drifting lower and lower and lower. Now, I'll go to the weekly here to make the picture a little bit better. Now we're ripping back down, obviously, coming back down towards these levels that we saw back in 2021. But it's got a slight little upturn right now. I don't know. I personally am just not comfortable or confident enough in AMC as a long-term business model. I don't think movie theaters are going away. I think they're going to have to morph themselves. Plus, now a lot of movies are being released on HBO and different streaming services same time they are in theaters. And, unless it's something awesome, like an action movie with explosions and I want that super crazy sound, like I'm not going to go watch The Devil Wears Prada at the theater or some slow rom-com. And I do that from my house. So, personally, NJ, I'm not a fan of AMC. I just can't bring myself to buy it just because of what the company is. But if you are looking at just pure price action, it looks good. I hate to say it, but the price action here looks like it's just slowly drifting up. I mean, look, back in May of this year, we were looking at a low price of $9.70, and just a couple weeks ago, on the 21st of July, we hit a high of $18. That's an 80% move up. Hard to kick the teeth of an 80% move in just a few months. So the trend looks good. It's just I can't bring myself to buy the company. If you can, then respect this trend line. If this trend line breaks, then I would say bail on it and just step aside. But a lot of pain in that one. Did you hear the crypto restaurant is no longer accepting cryptocurrencies as a form of payment? Is it really? I did not hear that. Oh, no. So you guys should check out the show Industry. I'll check that one. I actually just watched a show this weekend. It's the Pearl Harbor. It's like a documentary. It was actually really good. It's a 3-part series. If you guys have a chance, learn some new trivia. What were the 3 and no Googling this right now. No Googling, people. Just curious what your knowledge is. I have 2 questions. Number 1 is, at what exact time did Japan officially attack Hawaii on December 7th, 1941? What was the actual clock time in Hawaii? And then what were the 3 destroyers that they sunk? There were 8 of them in the harbor, and the Japanese made a mistake of just focusing on like 1 or 2. How many were sunk? And if you don't know which ones were, if you do know which ones were sunk, what was the name? We all know the Arizona, right? That's where the museum is at. But there were a couple. It's a great series on Netflix, guys. Anyway, I won't go any further in that one. What time do I got? Oh, good. I gotta go. Close. I want the exact time, Tomasina. If you were at trivia, you wouldn't get that answer. Nope, not 9:25. It was actually 7:48 in the morning. It was 7:48 in the morning, and then the 3 boats that were sunk were the Arizona, the Ohio, and the Oklahoma. It doesn't matter. It's Hawaiian time. What's the name of it? I think it's called Pearl Harbor Minute by Minute. I really enjoyed it. It's really interesting. They have there's an old Japanese fighter pilot, and he's 103 years old, and this guy looks like he's in his 70s. Like, I want to look that good when I'm 103. It was good. If you like war movies and history, it's pretty impressive. When you watch that one, you just got to think, man, the Japanese are so precise in what they do, but they had some miscommunication. And if they didn't have that miscommunication, they would have absolutely destroyed every single boat in that harbor and taken everything out. But they made some mistakes, and the Americans came back and fought them off. All right. That's going to do it for me. I want to make sure I get to some other things here. Let me just run the economic calendar for you. We'll do economic and earnings. There are some big names coming out with earnings, especially in the energy space. Tomorrow begins Jobs Week. We've got Shark Week going on Discovery Channel, but for us, we're going to do Jobs Week. We start with JOLTS job openings happening tomorrow at 7 a.m. Pacific time. There's also total vehicle sales, which there's been so much talk about it. I really want to see what these vehicle numbers come out at. I'm hearing a lot of people are just not buying cars right now, and that's hurting a lot of the economy. Well, let's see what the total vehicle sales numbers are. That is pretty much it for the U.S. markets for tomorrow, and there isn't anything monstrous on here except the Australian retail sales, which could happen, tomorrow night. Really, it's all about the rate announcement for Australia, which can be happening here any moment. Well, probably I think 6 o'clock. Here's what's happening for tomorrow, earnings-wise: AMD, BP, PayPal, Caterpillar, Gilead Sciences, Starbucks, Chesapeake Energy, and Marathon Petroleum reporting earnings tomorrow. Some of those are before market. As you can see, BMO on the right-hand side stands for before market open, and the other part is AMC. Not the theaters for NJ, but after market close. That is pretty much it. All right, everybody, that's going to do it for me. I'm going to wrap this show up early, even though I tell you the show's going to be 30 minutes, and here we are at 48. I'm going to try to get a couple guests on this week just so I can break up the monotony of you guys having to hear me talk all the time about whatever. If you have things you want me to discuss on this show, a direction you want to discuss or something, you can just put them down below the YouTube video. So today's video is what was this show called today? July's, I don't know, I can't remember the damn show name. I just make them up real quick. What do we call this one today? July's Strong Finish. So put it down below the video there. What do you want to see? Who do you want in the program? Things you like, things you didn't like, and I will incorporate that into today's show. If you don't, you can all go to TraderMerlin@gmail.com and send it in there, and I'll get to all of them on tomorrow's show. Thanks, everybody. Have a fantastic day. See you tomorrow.